Good day everyone, I am Jay Ann Lacia and I am the first reporter of the last chapter. So today, I will be discussing the chapter 13, the changing world order and capital markets. So when we say changing world order, it means that global power, influence, and economics are constantly shifting between countries and regions. These changes affect capital markets, the systems where money is raised and invested. So, in definition of key terms, in the world order, the global system that shapes relationships among countries through diplomacy, law, and international institutions, and in capital markets, where financial systems investors buy and sell assets like stocks and bonds to fund businesses and governments. So next is and also the overview of the key themes, geopolitics, economics, technology, and global trends. So now let's proceed to the factors driving the changing world order. So the global power shifts happen due to economic growth, political changes, new technology, and demographic trends. So we have here the economic growth. The second one is the political alignment, and the third one is technological advancements, and then the last one is demographic changes. So the economic growth, emerging economies are growing fast, attracting investors and changing global supply chains and new opportunities in developing markets. So, for example, factories moving from Western countries to Asia for cheaper labor costs have made China the world factory. Next is the political realignment. So, in political realignment, it changes in global alliances and trade policies. When countries form or break alliances, market reacts to new trade rules or conflicts. So for example, when countries, the US to China trade war caused uncertainty and affected global markets, including the Philippines. Next is the technological advancements, the digital transformation of capital markets, and innovations. So, the world is experiencing a rapid digital transformation, leading to the disruption of traditional businesses, models, and the emergence of the new market participants. So, innovations such as um, blockchain technology, robo-advisors, and high-frequency trading have reshaped capital markets and introduced new risks and opportunities. So, technology reshapes how money moves and investments are made through digital platforms. Next is the demographic changes. In demographic changes, population growth or decline influences economic behavior and investment trends and implications for global and Philippine markets. The shifting world the shifting world order is also influenced by changing demographics, including the population growth, aging societies, and migration. This factor can impact investment preferences, consumers' behavior, and economic outlook, consequently affecting capital market dynamics. So, investors and market participants must stay informed about the changing world order and its implications for capital markets. Next is the definition of world order and capital markets. So, we have the world orders. The world order refers to the created system or structure that individuals on a global scale. So, it aims to promote stability, cooperation, governs the relationships and interactions between nations, organizations, and peaceful coexistence among countries in various aspects such as political, economic and social realms. So in the context of international relations, so world order involves the establishment and maintenance of certain rules, norms, and institutions that the behavior of states and promote collective security. So it encompasses issues like global governance, international law, and human rights, diplomacy, and peacekeeping efforts. Next one is the capital markets. The capital markets are financial markets where individuals, companies, and government and sell can buy and sell various financial instruments such as stocks, bonds, commodities, derivatives, and their currencies. So these markets facilitate the transfer of capital or financial resources between entities who have surplus funds, which is the investors, and those who have required funds or the borrowers. Capital markets play a crucial role in mobilizing savings and facilitating investment, so as well as determining the cost of capital for businesses and government. So they provide platform for raising a capital through initial public offerings or issuing debt securities, allowing companies to expand their operations or government to finance infrastructure projects. So capital markets enable investors to diversify their portfolios, earn returns or investments, and manage risk. So these markets are usually regulated by financial authorities or regulatory bodies to ensure transparency, fair practices, and investors' protection. So, for example of capital markets include stock exchange, bond markets, commodity exchanges, and foreign exchange markets. Next is the importance of understanding the changing world in relation to capital market. Identifying new investment opportunities. Next is strengthening risk management. Third is promoting market integration and diversification. The fourth is analyzing macroeconomic trends. And the fifth is evaluating company and industry impact. And the last one is adapting to regulatory changes. So investors need to understand global trends to manage risk, find opportunities, and follow regulations. So investment opportunities, changes in the world order can present new investment opportunities. For example, emerging economies experiencing rapid growth and political stability may offer attractive investment. Identify these opportunities and potentially benefit from higher returns prospects. So by understanding the changing world order, so investors can identify these opportunities and potentially benefit from higher returns. Next is the risk management. The world order can significantly impact the risk profile of capital markets. So, by comprehending the changing world order, so investors can better manage and mitigate potential risk. Next is the market integration. In market integration, the world order can influence the level of market integration across countries and regions. So, by understanding how different nations and financial markets are interconnectedness enables investors to diversify their portfolios effectively and reduce exposure to system risk. Next is the macroeconomic trends. So, in macroeconomic trends, the changes in the world order can have profound implications for global macroeconomic trends. So, for instance, the rise of new economic power or the decline of the other may affect interest rates, inflation, and currencies. So, by grasping these trends, investors maka-adjust siya sa kanilang investments strategies accordingly and potentially enhance their returns. Next is the impact on companies. The world can significantly impact individual companies and industries. Changes in global trade patterns, political instability, or resource availability can influence the competitiveness sustainability of business. So, understanding the changing world order, it allows sa mga investors para ma-assess and then ma-evaluate yung mga potential impacts sa specific companies para it can make more informed investment decisions. Next is the regulatory environment. So in the regulatory environment, the world order maka-influence siyaan sa mga regulatory environment in which capital markets operates. So si government and then si policymakers is maka-adapt siya ng mga regulations based on global trends and geopolitical shift. So being aware of those changes, it can help investors para maka-navigate ng mga requirements and maka-anticipate ng mga potential changes sa regulatory landscape. So, by understanding the global capital markets is crucial for investment decision-making, enabling effective identification of opportunities, risk management, portfolio diversification, microeconomic forecasting, company impact assessment, and regulatory compliance. So, next is the traditional global power dynamics. So, we have a historical dominance of the US and the Europe. Next is the Bretton Woods system, US dollar as reserve currency, and the influence of Western corporations and institutions, IMF or World Bank. So, the US and Europe have long dominated global finance through institutions like the IMF and World Bank. So, the traditional global power dynamics have largely been shaped by the historical dominance of the Western powers, particularly the United States and Europe. So, these two regions have held significant influence over global affairs, including economic and political and the cultural spheres. So, next is the rise of emerging economies. So, the first is the economic expansion of BRICS nations. Next is the greater influence on global governance and markets. Next is the shift of marketing or manufacturing to Asia. And the last is challenges in equality, data governance, and protectionism. Next is Russia versus Ukraine and capital markets. So, first is Russian capital market. Russian capital markets have faced a series of challenges. So, Western countries, including the United States and European Union, have imposed economic sanctions on Russia, which have restricted access to international capital markets for Russian companies and banks. So, these sanctions limit the ability of Russian entities to obtain the financing and attracting foreign investment. Next is the Ukrainian capital market. Ukrainian's capital market have also faced challenges due to the conflict. So the country has sought to stabilize its economy and attracting foreign investment to support its recovery efforts. So however, yung conflict has created uncertainties, so making it difficult for Ukraine to access international capital markets. Next is the economic stabilization efforts. So in Russia, diversification beyond oil and gas, tech, and manufacturing focus. Next is Ukraine, anti-corruption reforms, tax incentives, FDI promotion. Next is ongoing challenges, geopolitical tensions, sustainability. So both Russia and Ukraine have taken measures to stabilize their economies and mitigate the challenges faced their capital markets. So Russia has focused on diversifying its economy away from oil and gas. So while Ukraine has implement siya ng economic reforms para maka-attract sa mga foreign investment and then to improve its business climate. However, the ongoing geopolitical developments and the success of economic policies will continue to shape the dynamics of the capital markets in these countries. So Russia-Ukraine war's impact on global and Philippine capital markets. Next is the global impact on the Russia-Ukraine war. First is the increased market volatility. Next is the investors' flight to safety or gold USD bonds. Last is the energy markets. So the increased market volatility, the conflict has led to heightened uncertainty and geopolitical tensions, resulting in increased market volatility globally. Sudden escalations or developments in the war have often caused fluctuations and in major stocks, indices, currencies, and commodities. Next is the flight to safety. During times in heightened tensions, investors tend to seek gold, US Treasury bonds, or currencies like US dollar. This flight to safety can impact global capital flows and potentially affect the performance of various asset classes. Next is the energy market concerns. Ukraine is an important transit country for natural gas pipelines supplying Europe. Disruptions to energy supplies, such as potential gas cutoff, have the potential to impact energy price globally. So this can influence the profitability or energy companies and impact stock market indices. That's all for my part. Thank you.